All right, welcome to OK Computer. I'm Dan Nathan, joined by a very special guest, my co-host of the On the Tape podcast, of the Market Call podcast, of CNBC's Fast Money, the one and only Guy Adami.
Yeah, I was just wandering around, and I saw
really weird. And we got this sign behind us here, CME Group. You and I are down at the CME Cup in Naples, Florida here. CME Group is a fine...
Tiburon,
yeah. They're a fine sponsor of our On the Tape podcast and our Market Call. We just thought they'd give them a little signage over here. We're going to run through, normally we talk a little public markets, we talk private markets. It's very focused on tech. I have Debo usually join me. I have, Rick Heitzman join me, a whole host of other folks join me. But this is going to be me and you taking a whiz around my main fact set screen in the public markets as it relates to tech. I know
when you say taking a whiz around, I mean, my age, might have to get up and go.
All right. Well,
you know who I like on the OK Computer when he comes on? That guy that played basketball at one of those schools, James Richards.
Yeah. Oh, yeah. I mean, Jeff Richards. Same difference.
Did I say James? Yeah. I meant Jeff.
Yeah.
You can edit that out. I mean, but he had Matt Hops back in the day.
Jeff Richards did have Matt. He's coming on the pod very soon, actually. So, all right, let's do this here, Guy, because it is Tuesday afternoon, November 14th. The S&P is up nearly 2%. The Nasdaq is up a little more than 2%. The Nasdaq on the year, Guy, is up 34%. The Nasdaq 100 is up 44%. The S&P 500 is up 17%. What happened this morning? CPI, a measure of inflation, which has been coming down dramatically over the last year or so. It topped out, I think, last year at 9% or so. The Fed started raising interest rates in early 2022 to battle said inflation,
that they begged for.
One of the first knock-on effects in risk markets was that high valuation tech, SPACs, cryptos, NFTs, anything speculative started getting killed because it really meant the end of the free money era, the end of FOMOing, all this crap was over, okay? So here we are now on the other side of this with CPI coming in less than expected. Yields are down now. The 10-year yield is at 4.45%, down from 5% just a few weeks ago, and investors are moving back into the riskiest sort of stuff. It doesn't matter if you're unprofitable. It doesn't matter if, whatever the hell, right? So talk to me a little bit about that psychology, because the NASDAQ, again, topped out late 2021, was down a lot more than the S&P at its lows in October of 2022 last year, and now it's up dramatically, outperforming the S&P 500.
A lot to dissect there. So there were dozens, when I say dozens, probably a few hundred stocks in the laundry list of companies that were down anywhere from 50 to 85%, which is remarkable if you think about it. From that period of time, that's sort of November, December 2021, until sort of the troughs that we saw for so many of these. And if you're looking for proof positive, and this is not to cast aspersions, but the ARK ETF as well just got lambasted on the back of everything you just talked about.
Which top holdings were, Tesla,
all the
Square,
names
all that sort of stuff.
Which I think at one point, the top 10 holdings, when Tesla then sort of joined the party to the downside, their stocks were down anywhere from 65 to 80%, which is very difficult to do, but it just speaks to the importance of interest rates and free money. Okay, now to answer your question, obviously we've seen 10-year yields move 55 basis points over the course of probably 11 or so trading sessions, which is not historic, but doesn't typically happen when the sort of the numerator and the denominator at levels, 4.5%, 5%, number one. If it's 20%, they move 50 basis points, entirely different when it's 5%. The market is having this Pavlovian response to exactly that. And, I'd like to say it's investors, but I don't even know what that means anymore. Yeah. So much is driven by machines and just interpretation of different inputs. That's what we're seeing today. And that's what we might see. Listen, we could see it, quite frankly, to the end of the year. In the absence of anything happening, you could see this sort of levitation with the market. But again, it doesn't mean that all the problems that have been haunting us now for the last couple of years have been solved by any stretch.
Yeah, so let's take a step back. Over the last month or so, we got Q3 earnings and Q4 guidance from, obviously the major tech names. Apple was a little disappointing after the call.
It was very disappointing.
It was disappointing. Okay, the stock sold off after that. Microsoft sold off a little bit. Google had sold off 9%, okay, like after its earnings and results. Meta was okay. Amazon had a big beat. You know, Tesla sold off a lot after its earnings. Netflix jumped a lot too, and that's been off to the races. So there was a lot of dispersion, I think, within the mega cap tech stocks. But when you think about that, I mean, the picture was there were no disasters. I think that was the main point, Guy. And
there were no disasters in terms of cutting guidance or pre-announcements. None of that happened. You didn't hear about any double ordering or inventory gluts.
Yep.
But again, you did not. Doesn't mean, though, that that's not on the horizon for sure. And again, it speaks to just the power of passive investing and when money gets put to work and how powerful it can be. And we want to talk about Nvidia because that's the reporting, I believe, next week, if I'm not mistaken.
Yeah, so let's talk about Nvidia. And so when you think about this stock, you know, had gotten below $400, Guy, as we're talking right now.
Stop for a second.
Yeah.
So it was in August, I believe, right, when they reported their last quarter. I think the stock, the day of earnings, they report after the bell, was closed around 485-ish or so. In the after hours, I saw the stock tick 516, $516. It did not trade that high the next day, so you will not see that print. But I am telling you that some mechanism bought and sold stock at that price.
All right, so that day, okay, of the earnings, the stock closed. I think the all-time high is 502.66. So today we're trading at 496 or so, and the high this morning was near 498. So we're basically there. And just to put a fine point on this, you know, I think on the last day of October or the first day of this month, the stock got as low as, I want to say,
below 400.
395, okay? It has gone up 25% in a straight line, okay, over the last kind of 15 trading days or so. And just do the math, okay, on a market cap stock right now is at $1.2 trillion.
Almost $300 billion move.
It's truly astounding, okay? So when you think about this.
Which again, I'm interrupting, I apologize, but how many $300 billion companies are out there in the first place?
I think 50.
I think they're less than 50.
Yeah.
And you just added that over the course of 10 trading sessions. And the volatility in Nvidia, for example, that we've seen since that earnings release. Again, you said it, 502, traded down, I think, 410, back to 470, below 400, and then here we are now over the course of 3 months.
Yeah, and so let's just think about earnings next week, okay? So we know that, you know, the implied move in the options market is about 8% in either direction. The stock has just rallied 25%. So when you think about expectations for earnings and sales, I mean, they're really high, right? And so we know that a lot of competition is coming out. They just released an update to their H100 chip. That's their high-end graphics chip that trains these large language models and generative AI models. But if you think about what, you know, I mean, this company is expected next year to grow sales 60% or so, or grow earnings 60% and grow sales, excuse me, I had that wrong, you know, about the same, about 50% or so. And that's what people are basically saying. I'm willing to pay 45 times this year, right? And 22 times sales, and that's about 30 times next year's earnings, 15 times sales, because they think it's growth at a reasonable price. Listen, this is like deep end of the pool sort of stuff. I know that's an expression you like to use. I think after a rally that it's just had here, Guy, is not something that I think for it to break out above 500 and go meaningfully higher. Okay, so just think about the implied move would be about $45 in either direction, right? So if you think the stock could be at 540 next week, you know, buying at the money call could make some sense on defining your risk. It just seems like the barrier, you know, like the expectations are super high after that move. But let's talk a little bit about some of the other semis. You and I were talking about earlier in the week. The way the semiconductor index closed on Friday, Guy, up 4%. The S&P, Nvidia, okay, but it wasn't just Nvidia. Okay, it was Intel trading near a 52-week high. It was AMD up more than 25% off of its lows a month ago. Okay, it was Taiwan Semiconductor and Global Foundries, which have had big moves after their earnings, talking about stabilization in some of their end markets. Micron made a new 52-week high in the memory space. So semis, okay, so cyclical tech, okay, and basically trading really well and shrugging off maybe some news that you could perceive as bad, but maybe when some of the ones, the equipment guys, the ones who are giving indications about CapEx, and then the foundries, the ones who make the chips, okay, saying that they're seeing some stabilization, that's bullish, right, for tech in general?
Well, it's interesting you say cyclical. There's nothing cyclical. I mean, the cyclicality seemingly, in terms of the way the stocks trade at least, has been taken out of
I
it.
mean, economically.
No,
like, if you
you're
think about
right.
it, yeah.
I mean, but the stocks trade entirely differently. Now, I'm glad you mentioned AMD, which reported earnings a few weeks ago.
Yeah.
We had a conversation in real time on Fast Money, and the conversation we had was a lot of people seemingly are zigging when they should be zagging.
Yeah.
And that stock, the knee-jerk reaction post-earnings was to take it lower, I think somewhere down around 93.5, 94. And we said, you know, the time to sell AMD was a couple months ago when it was north of 120. This is now the time to buy this stock. And that proved to be somewhat prescient. And I'm not doing this to play Monday morning quarterback or pat ourselves on the back. Now, as we approach back to 120, you're getting over your skis again. It's amazing how quickly the stock goes from being reasonable on valuation to being expensive that quickly, and you're seeing it in real time. So these names have been somewhat I understand them to a certain point. Nvidia is a transformational company, but they are being handsomely rewarded for it in terms of the valuation that they're garnering from the market.
Yeah, and I just say with AMD, you know, if you look at the out year, so if you look at next year and the expectations for, you know, 17% sales growth after a 4% decline this year, and then with an earnings expected growth of 43% after a 24% decline this year, trading at 31 times earnings, you know, that's in line with what Nvidia is trading at. So here's the thing. If AMD all of a sudden with this chip that they are just announced and they're going to start shipping that's going to compete with this H100 Nvidia chip, this high-end graphics chip, let's just say that does really well. Let's just say they can compete on price, compete on quality of the chip, right? And really get a lot of orders. And that was one of the things in May when Nvidia reported and guided why that stock rallied like that. That's the bet that you're making here in AMD.
You know, it's interesting you said compete on price. You think about where everybody is moving their business. Everybody in this vertical wants to be in a very specific place because that's where the margins are. But, you know, Amazon used to say the old story was your margins are our opportunity. And that's true. Same thing's going to happen here. It's not going to happen next week. But at a certain point, the margins that they're enjoying now are going to be, they're going to start to get cut without question. And when you start to see margin compression, you talk about it all the time, Bob Farrell's rules of investing. When margins start to deteriorate, it's not typical. And again, we might be a few quarters away from that, but that's coming to a theater near you.
Yeah. All right. Let's go over the software space. And just in general, to put a bow on semis, I mean, to me, the price action is bullish. The reaction to news perceived to be bad was bullish. And then some of the commentary out of some of the important players in the space who dictate CapEx and then the foundries was also relatively bullish. Okay, so like I just want to be really clear on that. And I've been kind of speaking to that over the last couple of weeks. I have not been positioned the opposing way of that, but I'm cognizant of that. All right, the other thing that spooked me last week, because again, I was bearish of the QQQ, the Nasdaq 100, the ETF that tracks it, and we know that the top, 7 or 8 names make up 40% of the weight. Microsoft closing Friday at a new all-time high was important, right? When you go back and you think about July, and we've talked about it a lot, okay, the stock sold off 15% into its September lows from the July highs. To rally the way it has over the last, call it month and a half or so, to make a new all-time high, it's basically giving the rest of the NASDAQ the all clear, okay, to say, come along for the ride. Adobe made new 52-week highs. Salesforce has got back on its horse. So a lot of these names that had kind of been punished on valuation or whatever, they're kind of getting back to it. Adobe's on a runaway breakout. It traded almost as low as 500 in late October, and here we are just above $600. Okay, like so there's a lot of things going on with real market caps, Guy, that I think is really important to kind of make note of.
These are huge companies that are and the percentage moves we've seen. Forget about just over the course of a couple of weeks, over the course of a couple of hours, are staggering, and it speaks to the market's desire, or maybe the fact that the market got itself completely off sides in this late year chase for whatever perceived beta you're going to see in terms of the broader market. I think it's somewhat misdirected. But again, it's hard to argue. You know, you can't get in front of this freight train right now.
Yeah, and I guess the only point I would make is that like semis are very crowded and they appear to be very overbought. You know, some of those mega cap names like Microsoft, Amazon's at 52-week highs and the like here. You know, you might see folks who are chasing, right? They're trying to get some beta into year end. You might go for some of the laggards, and that's why I wanted to bring up software in a way, because maybe it's a snowflake. And I'm not telling you that I'm a buyer of Snowflake. I'm certainly not on valuation. The jury's still out on, you know, they're losing money and the like and everything like that. But I'm just saying, be cognizant, because when you have an Adobe rally 25% in a straight line, you know, like you have to think of some other opportunities to get those back up to 52-week highs if it's going to be a bit of a chase into year end. Let's hit the kind of digital ad space. Let's hit like, Google, and I'm going to throw Meta in there here. You know, this was one of the ones, Guy, this gap in Alphabet, the stock was trading very near a 52-week high in and around its print. It had that gap lower, as we mentioned, down 9%. It went lower for another couple days. It got basically to 120. It was at 140 pre-earnings. And now here we are at 135 bucks. It's basically filled in the entire gap here. Now, what we heard out of Google when they reported, and we were listening to that call on Fast Money that afternoon, this was kind of, I think, about 2.5 weeks ago, 3 weeks ago, it didn't sound that bad. You know what I mean? But investors kind of hit the sell button first and ask questions later.
The reaction to the downside, and then if you think about then what the trade desk said, symbol there is TTD, and a couple of weeks later, earlier this week, and that stock, which had been getting sold off in a major way, then sold off another 20-something% on the back of it.
It went from 80 to 60. So it was trading at 80 the day of the earnings. It closed, below 80 and then traded the next day at its lows, 60 bucks.
And this is a stock that was north, I think, of 90 at one point this summer. So you had started to see a sell-off, and then you just had this sort of cascade. They're great stories. They're not great stories. I'm struggling and in terms of, understanding the stories, but then try to understand the valuation that the market is assigning to a lot of these names in an environment where I don't think it's justified. That, to me, is really, that's the push-pull here.
Yeah, and I guess just, and there's another sector, and then we'll kind of like wrap the whole thing up here a little bit here, but like FinTech stocks can't get out of their own way. Yeah. So if I look at like a PayPal and, that stock is down, more than, 25% on the year. Square, which has had a huge rally of late, is still down, more than, 12, 13%. Bill.com, that was a big disaster last week. SoFi's had a good year. So if I just think of some of these, software, like related, FinTech sort of names, it's interesting that, PayPal is a company that makes money. You know what I mean? It is profitable, and it's actually put in that camp of down 80% from its all-time highs in 2021. So I guess there's still investors being a little picky about some of these areas, which I find kind of interesting. Okay, so just to kind of put this all together, Guy Adami. So here we are. It's mid-November. Next week is going to be a holiday shortened week. We know that people get all geeked up about Black Friday as it relates to consumer and Cyber Monday. And then supposedly you have a really good period of consumer spending, and they're doing a lot of it digitally these days. And that's why it's kind of wrapped up as far as, digital ads and e-commerce and the like here. If we get through these next couple weeks, there's no really negative readings on the consumer. That being said, University of Michigan was really bad last week, okay? We get through that. What would be the reason why these things shouldn't rip into year-end, like tech in general, being the leadership sector that we know that they have been over the last, call it 10, 11 months?
Yeah, what I've learned sometimes the hard way is in the absence of everything you just said, in the absence of bad news, there's this levitation that takes place in these names. And it's not even a function of necessarily people doing the critical work necessary around it, trying to understand valuations, different metrics that we talk about, potential growth, obviously the wild card of double, triple ordering, which would create this inventory glut. Forget about all that. It's just sort of, and I'll use this term, this greater fool's theory that takes place is I'm going to buy something at X, knowing or hoping that the guy or gal next to me will buy it for X plus 1 10 or 15 minutes later. And a lot of that is going on right now.
Yeah, last thing. Okay, last night on CNBC's Fast Money, we were talking about EVs in general, and Rivian and Lucid, there was some news, and we were talking about Tesla a little bit. And one of the things that was kind of interesting, and I made this point, and Danny Moses, our On the Tape podcast, co-host called me after the show to make a point. He's like, you didn't nail the plane, or you didn't land the plane on this Tesla point, because you guys all went around the horn with Tesla, and Mel came to me and I said, one of the things that's really interesting to me about Tesla, it was up 80% on the year, okay? And I said, if you look at how the stock performed on the day after it reported its last 3 quarters, on average, it has sold off 9.5%, okay? So 3 quarters, the next day, stock's down 9.5%. And each quarter, the news has not been good, okay? Like, so on the day that they give you the most news, they trot out their CEO to take questions from analysts or whatever, the stock trades horribly. But again, still up 80% on the year. And so for me, sometimes maybe it makes sense, greater fools. Because, do you understand what I'm saying in a way?
Of course I do. What you're saying is, on days where they actually tell you what the fundamentals are, the market says your fundamentals suck and we're going to sell your stock.
10% in one day in one stock of this size, it's a $700 billion market cap company.
And then the rest of the time,
it's just FOMO.
That's right.
It's YOLO.
And
you only live once,
You can say that with Tesla, but you can say that about a lot of things.
Stocks.
But no, but that's what's going on. When the period of time, that window where fundamentals matter, what we've seen is there's obviously a knee-jerk reaction lower because fundamentals are taking it. The rest of the time, people are saying, you know what, fundamentals don't matter. It's sort of a chase, and that's what we're seeing. I mean, Google's a great example of that.
Yeah, no doubt about it. And again, I think you and I both, the way you kind of thought an AMD the day after or during their call when the stock was down, you thought it was a buy. I thought Google was a buy, but it's really hard to kind of put your finger in the air and do that when people are wholesale selling it for not great reasons. Okay, listen, Guy Adami, I just wanted to take a little run around
here in Tiburon.
Yeah, here in Tiburon, but I wanted to kind of take a run around the tech stock universe and the
love
public
the
markets
album,
here a little
Computer.
bit. Do you? The 1997 album from Radiohead? What's your favorite song on there?
Okay, Computer.
No. You know what? You're probably like a Karma Police guy. Would that make some sense,
I
Jacob?
love Boy George. Can I tell you something?
No.
That song that's not Karma.
No, it's not. All right, we're going to have to put that in the show notes. That is the proper.
By the way, Boy
OK
George is
Computer.
making a comeback. I saw that recently.
Really?
Genius songwriter, singer.
I thought.
By the way, the harmonica in Karma Chameleon rivals that of any harmonica in rock history. You can cut that out if you want.
We will do. All right, Guy Adami, thanks for joining me on OK Computer, a very special edition of OK Computer. We'll see you next week. Thanks.